Happy Friday, everyone. Henry Wheelwright, Chris Griffith, Managing Partners of Stable Point Partners, checking in with our trusted clients and, of course, general audience. It's Friday, September 27th, as we've done in the past, just getting our clients some key information, little feedback on the week. I just want to talk about China. It's the big story. We've had a huge rally in Chinese stocks, US A-share stocks, almost up 18% as we record this video just alone on the week. What has happened? Big story has been stimulus. Much like the past, when the Chinese economy struggles, which it has considerably, the Chinese government steps in. People's Bank of China unleashes a close to $325 billion in US dollar stimulus package, really aimed at two areas: revitalizing the housing market and stimulating their stock market. So on the housing front, big 50 basis point cuts for Chinese consumers on their mortgages. I think what's also interesting is reduces the amount for down payments on new purchases and also makes the affordability of refinancing much more attainable for the Chinese consumer. So an opportunity to try to boost that housing component of their economy. The second is a very large swap repo account for non-traditional banks in the Chinese market to come in and do two things: repurchase stocks and actually buy stocks directly on their balance sheet, thus leading to this big rally in a lot of US held names. I think the real story for us and our clients is we've preached diversification. If you've looked at the S&P the last few years, it's been the winner, owning non-US stocks, or more importantly, emerging market stocks where Chinese stocks sit in a dominant fashion, has not been the most favorable place to be. I think the big reminder is when you rebalance portfolios, stay diversified, you have an opportunity to benefit from a week like this. And I think generally speaking, we think the trend that Chris is going to talk about in rotation is to try to find opportunities where there's value. So I'll pass along to Chris to talk a little bit about that.
Yeah, thanks, Henry. Definitely some big news out of China this week, and exciting to see it. As you know, we've long preached diversification, asset allocation, thinking long term. And the last couple of years in the stock market, you've seen this real rush to the Magnificent Seven and what New York Magazine has dubbed now the highest concentration in the smallest number of companies literally in the history of the US stock market. So as we see that come to place, asset managers like Henry and myself, looking at the fundamentals of financial markets and thinking long-term for clients, we've talked about this rotation away from what has become a little bit of a top-heavy US market. And as we wrap up the third quarter now, here for 2024, you're really seeing that. So just to share this quarter's data to evidence some of this rotation and why we want to stay diversified across the markets. The S&P 500's had a continued great run. It's up 5% for the quarter. However, if you had just an evenly weighted S&P 500 index as opposed to the top heavy, you're up around 8.5% for the quarter. The Russell 2000 small cap, the EFA International Index, which China is a component of, even the Dividend Aristocrats Index now, stodgier dividend paying companies, they're all up between 8 and 11% this quarter versus 5% for the S&P 500. So again, not the goal of being diversified to outperform in the short term, but I think it gives us a little indication of where markets may be going over the next few years, finding value in other areas. So the message to us is stay diversified, equally weight your portfolio where you can, and rebalance a couple of times a year if you're able to. But we'll be talking more about this in the weeks ahead and back for more next Friday on the market commentary. But thank you as always for your trust, your confidence, and your advocacy.
Great work, Chris. Everybody enjoy the weekend. We'll be in touch.